Hey guys, welcome back to the official Loki Stonks YouTube channel. This is your girl Janksta Ange. Today will be the first episode of our VIP Speaker Series, and today we have the pleasure of speaking with Farm D, a very well-known biotech and tech trader on Twitter. Before we get into it, make sure to hit the like and subscribe button and turn on the bell notification so you can see more videos like this, and join our Discord if you haven't already. So let's get right to it. I can't wait to learn from him. Well, we want to welcome Farm D to Loki Song's first VIP Speaker Series. Welcome.
Good morning, Angela.
Good morning. Tell us a little bit about yourselves. Let the audience kind of get an idea of who you are.
Hi, this is Farm D. I'm not sure if you guys had noticed me on Twitter with my Farm D handle. I'm a pharmacist. I finished my bachelor's from Cal State Sacramento in biochemistry. Then I got accepted into the pharmacy school, USC School of Pharmacy. So I did my doctor of pharmacy from USC. Then I was working as a pharmacist running a Kaiser Permanente clinic, but moved to an hospital setting. So I was working as a pharmacist in an ER setting. Primarily, I was working on stroke patients and all the trauma patients for roughly 10 years. Was a very challenging job. So then I got an opportunity to move into the management arena. So that was my transition from an ER pharmacist into the management position. So I was a pharmacy management for several years. At the same time, I was heavily invested into stocks. I was investing for last roughly 10 years or plus. So investing was also my full-time job and working as a pharmacist at the same time.
Wow.
So recently I quit my pharmacy job because I wanted to pursue my investments as a full-time investor, long-term and short-term. So that's just my story in a nutshell.
Okay, great. Well, congrats first of all for your, early retirement. That is the dream.
Thank you.
Since you were working, basically in an ER environment, I'm sure that was very time consuming. When did you kind of start trading in your pharmacy career, and how did that, was it hard to balance? How did you start your trading day?
Well, working in an ER pharmacy, my job basically starts 6 a.m. in the morning. And then you have all the trauma patients as the day goes by. I had minimal chance of doing day trading. So primarily at that time, I was a long-term investor. So that was 6-7 years ago. So I was doing all of my research over the weekend, looking into different companies. Especially I was primarily focused on oncology companies. So I will do my research. I will basically, buy and hold for quite some time, but had minimal chance of doing day trading, because day trading, you need to know what's going on. You need to look at the overall market. So then my focus was long-term investing because of my job requirements.
Okay. And so what type of trader are you then? Would you say that you were more of a long and hold, but nowadays you are more actively day trading every day, right?
I think, personally, based on my strategies, I think you need to take any opportunity, whether it's a long-term or a short-term. So yes, in the past, I was a long-term investor and then very little focus on short-term trading. But now, last 3 to 4 years, my basic strategy is to any opportunity there, whether it's a day trade, a swing trade, short term or long term, I will jump into it. I will invest my money into it because I think you need to focus on every arena, not just the long term. If there's a short term, there's a big pullback and you need to do a swing trade, I think that's a good opportunity. You should invest money, and then when there's the time to lock profits, then you move on. So I think my strategy changes from time to time. But I'm still a long-term investor, so I have 2 different portfolios. One is primarily focused on long-term, where I basically keep all my long-term companies intact. I hardly buy or sell. But then I have a short-term account, which I always provide an update on Twitter as well. And that's where I do a lot of swing trades, day trades, and short-term trades.
Okay. Well, in terms of, I guess, long-term holds, then I guess we can just go ahead and ask, how do you do your long-term due diligence for some of these stocks? I know LVGO was definitely one of your big winners, and it helped a lot of people as well who were following on Twitter. How do you sort of determine what's a good biotech long-term hold stock?
Well, let's just go. I mean, there's always opportunities based on the market needs. So, pandemic brought a good opportunity for Livinggo because basically when I do my due diligence, I look into companies. I always look for like strong leadership. The management has to be my number one priority because I need to see how the management's doing or their previous executive roles. And then you also look into acceleration in their earnings and revenue growth for constructive quarters. So you need to see how the company is performing past several quarters and how the growth is going forward. You need to focus on their guidance as well. So the faster the growth, the higher potential in earnings. And obviously, consequently, this is going to reward shareholders, as the stock goes higher over time. And then another thing I look into it, the large target market, the more potential out there. So those are some of the things I always look into it. And I think Livinggo was one of the best examples for me in my investing career in 2020. And looking at Livinggo, it's like a digital health company that focused on managing patients' chronic conditions, like primarily they were focused on diabetes, hypertension, weight management through using their technology platform. So when you look at Livinggo, you see that their platform empowers patients with chronic conditions to better manage their health outcomes through monitoring and coaching, as well as they do have access to their medications. So that was one reason I invested money into Livinggo. So when I looked at Livinggo, I did my due diligence, and then the first thing I looked at was the management. Then I saw their clientele. So their clients were employers, health plans, government entities, labor unions. And then back then, around when it was trading around $20, 20% to 25% of the Fortune 500 companies were Livinggo clients. So like earlier I said, that was a huge market. That's why when I looked into all these factors, I started investing money into Livinggo while it was trading around $18 to $20. And then looking at that market potential, then I started to invest more and more money into Livinggo. And then now going back just 3-4 months, when I started investing around 20, and it almost in like 5 months, it hit 160 plus in just the short term. So that was one of my best returns this year.
I think that leads to my second follow-up question is, with a lot of these biotech stocks that anybody trades, right? It's a lot of binary ones and a lot of being patient. So how do you determine, one, how long you hold a stock, and like, how do you know when to sell? Like, for instance, for your LVGO position, did you sell most of it? Are you still holding some? Yeah, so how do you typically go through that decision-making process?
As you've looked into my Twitter handle, I always suggest people that on your long positions, you always trim a little bit. So what I do is I trade around my core position. So if let's say for a certain stock, my core position is so many shares. So I'm always going to keep it. And then if the stock is pulling back, I will add few shares. And as the stock is going up, then I will trim those shares. So my basic strategy is to trim around my core position. I always keep my core position unless company's fundamentals changed. And then I feel like, okay, the company's guidance changed, fundamentals changed, then I will exit my position. So for me, even going back to biotech is not an easy sector to invest into it. You basically need to know everything about the companies you're investing into it. You need to know their pipeline, how much cash flow they have. And obviously, like I said, my number one criteria is looking into the management. So for biotechs, I still do the same strategy. I trade around my core positions in tech. But for biotech, primarily I focused on oncology sector a lot. Once their data is out, because in biotech sector, if you're I stopped playing the binary catalyst, like playing the catalyst like data or any FDA. outcome. So because if it doesn't go in your favor, the stock could take a big hit, and obviously that will be very negative for your portfolio as well.
Right. And I guess another question I had is, because you also do trade tech stocks, what percentage of, say, your portfolio is biotech and what other percentage is tech? Or is it more like short-term, long-term split like that?
Well, even if you look into my long-term portfolio, I have biotech stocks, which are my primary investments in my long-term, but then I do have at least 25 to 30% of my portfolios in tech stocks also, because I need to do diversification. You can make a lot of money in selective tech stocks like Apple, Microsoft, Amazon, Tesla, you name it. From time to time, I change my stocks in my tech holdings. And then the short term, it's heavily focused on all the opportunities in tech as well as biotech.
So do you think, because there's always people saying that you should diversify your portfolio, you've kind of narrowed it down to just biotech and tech. Do you think that's a good way to look at it? Just focus on maybe one or two sectors to kind of have diversity, but not just like all eggs in one basket? Or do you think someone who's just starting out should just only focus on one sector?
No, I think it should be a diversification into several sectors. So let's say if oil is going to go up, then I will invest money into oil also. So gold as well as an hedge also. So no, diversification into every sector if you are familiar with that sector. So I do not invest into any sector if I have zero knowledge about it. So primarily, yes, my focus is on healthcare and technology sector at the moment.
Right, that makes sense. So how has trading in this, especially because you've been trading for 10 plus years, I'm sure you've seen multiple different markets, and this year has definitely been a crazy ride. I personally only started trading mostly this year and a little bit of last year, and it was very much like the bull market euphoria / the crash and the V-shaped recovery. How has your trading strategy sort of changed or adapted with this market currently?
I think my strategy is the same that I had for years. It's just when the market is more volatile, you get more opportunities as a trader. So nothing changed on my perspective on my end. What changed is that I'm more active doing trades. So let's say if you notice last 2 weeks, these tech stocks are going up and down on daily basis. So when there's a significant pullback in any stock, let's say you name it, Apple or Tesla, so that gives me an opportunity to do day trades as well. So volatile market does bring you an opportunity to do more trades if you can follow the certain criteria how to day trade, and then based on like MACD or RSI indicators or several other indicators that I use for my trades as well. So I think you could still make good money during the volatile markets, because there's always a trade somewhere there on a daily basis.
Right, you can always make money whether the market goes up or down. This has definitely prompted a lot of new traders to enter the market this year. So what are your, I guess, recommendations for someone who is completely new? What is maybe a mistake that you've made in the past that you want to warn novice traders?
Well, my mistakes from my past were primarily the number one reason was my quantities. When you are in a greed mode, you wanted to become a rich person as quickly as possible. And that's when, I guess in my case, when your failure starts, because you should not be following anyone. So if someone is buying, let's say, huge quantities of a certain stock, you should not follow them. You basically focus on your portfolio size. So you need to minimize your quantities. You need to diversify money into several stocks and avoid speculation as possible if you are a new investor, because yes, speculation, you could make a lot of money, but you could lose a lot of money since your portfolio size is small. So I recommend avoid playing too much into speculation. Make sure your quantities are small. Avoid binary catalyst, because that's a pure gamble. You do not know how the data is going to be or how the FDA, their decision is going to be. So you avoid getting into any binary catalyst, avoid into speculation, and then invest into good companies. So you grow your portfolio to the point where you're more you're more comfortable going into speculation or maybe having a larger quantity.
Right. So always just don't play with fire unless, you have some, extra cash laying around, right?
One thing I always recommend on Twitter from time to time is no matter who you follow on Twitter, always do your due diligence first, because you need to know, in a company you're investing money, you need to know everything about it. So yes, Twitter recommendations could be biased as well, because obviously when I'm inputting all these tweets, all of my holdings are in those stocks. So I have done my research, but I always recommend my followers that they need to do their due diligence as well.
Right, yeah, that's so important. To always do your own DD. Do not blindly follow someone and then, if you end up losing and you don't even know why.
Yes.
Yeah, I completely agree with that. Any books or resources or websites that you typically like to go to, I guess, do your due diligence?
Personally, up to this point, I haven't read any book or any websites. All I do is I just looked into, let's say, when I was investing into Living, back to my investment, I always looked into their earnings. I always follow their earnings, their guidance, their numbers. So I think that was a number one research for me to look into how the company is performing. And then when it goes to biotechs, you need to look into their pipeline. Also looking at how much cash flow they have. Are they going to do any secondary? If their cash flow is minimal, then expect the stock's going to be basically volatile as well. So I basically follow the company's guidance, all their earnings call, but never had any chance to read any books or any other websites for my investment so far.
Okay, yeah, that sounds good. And the last question that we were going to do for today is, what are the top 3 to 5 stocks to buy or watch right now?
So the first one is PAPMed. That's one of my top positions. PDSB. The reason I'm a lot more money into PDSB recently is because of their 2 vaccines towards fighting COVID-19, and also their oncology platform, plus their pipeline into infectious diseases as well. Then Myovent, then there's other companies into tech sector as well. Like I'm still building positions into different tech stocks that are pulling back right now into the volatile. But back to PAPMed, Myovent, and then PDSB, and then so many other stocks like KPTI. Those stocks I'm investing more and more money right now.
Okay, great. Yeah, and I guess for anyone who is listening, he has pinned his top holdings on his Twitter page. So I guess if you're interested, just go on over there and give him a follow. That is all for our talk today. Thank you so much for sharing your wealth of knowledge. We're all very grateful.
Thank you, Angela.
Thank you. Alrighties, thanks for tuning in. I hope you learned something. We have many more amazing VIP speakers planned for the future. So again, turn on that bell notification so you are notified immediately when we do post a new video. Or if you want to know ahead of time, join our Discord because I announce everything there first. To join the LKS fam, I will link everything in the description below. Please remember to like and subscribe, follow all of our socials for updates, and see you in the next video.
So I can learn how to